David Kneale, the CEO of Clicks, is standing by to unpack those annual results that were released this morning. Thank you so much, David. Great to have you on the program. We saw quite a strong number coming through on the retail sales front. We saw increasing by around 10.9%, but you did cite tougher trading conditions affecting the company and also coming off a high base because of the FIFA World Cup that we experienced last year. Take us over the period that was. Yeah, look, I think these are good results, but the year got tougher as it went on, and the second half I think was particularly tough. The World Cup last year, a general feel-good factor, longer school holidays, and for us our own selling price inflation fell away to virtually zero in the last couple of months of the year. So we have muted consumer spending, very little inflation. It's all about driving volume and cost containment. David, when you look at what's going forward, we had a fantastic retail sales number that was released yesterday, 7.1% year on year. You're talking about gaining market share. Give us an indication of what you're actually pricing in the future, because we know that this number was slightly warped because of the fantastic period that we had last year. But can we still experience double-digit growth going forward? Could that be a reality still? We're certainly not anticipating that level of growth going forward. There's very little good economic news around the world at this point in time. We think consumers are going to stay pretty cautious, so that's certainly the way we're planning our business in the months ahead. David, take us through the loyalty program for your consumers at this point. Have you seen an uptick? We know that Pick n Pay is starting to embark on a very similar product. Are you worried at any point that we could see an increase in competition in that space? Well, I think we already have seen the increase in competition with Pick n Pay's program. What it does is it increases the competition for space in the consumer's wallet or purse. So we've got to make sure that the Clicks Club card, which has now got 3.5 million active cardholders, we've recruited another 300,000 in the last year, stays very competitive. So we're focused on improving the offer. So you can now earn club card points in a variety of trading partners for Clicks. So we've got New Metro Cinemas, Musica, Avis, City Lodge. So that's how we're focused on making sure that consumers still want to keep the club card in their purse. David, within the pharmaceutical space as well, we actually saw a bit of an issue coming through there with regards to pricing power. Do you think that those troubles are over? Do you think that we could actually see Clicks becoming stronger within the pricing element? We know that having this pharmaceutical offering is actually embarking on ensuring that you've got more feet through the door. Are you worried about profitability within this space? Look, we've always said that we do make money in pharmacy. We don't make a lot of money in pharmacy. What pharmacy does do is it brings more customers into the shop, and those customers use our pharmacy, and they also buy products from our front shop as well. So we're pleased that we've now got 283 in-store dispensaries. We're very clearly the #1 consumer choice in pharmacy. We'll continue rolling out pharmacy in the year ahead. The plan is to open another 30 to 40 in-store pharmacies in the next 12 months.
David, just a question from me. We see a reduction in the dividend cover that you've now published. Where can investors expect this to stabilize, given your capital expansion programs and your store rollout over the next few years?
Look, the ongoing commitment has been that we'll return excess funds to shareholders. So our capital expenditure requirements to grow the chain at around 30 stores a year is in the order of 250 million rand. We're generating much more cash than that, and we've said that we'll always, as I said, return any excess funds to shareholders. So that's been done via a combination of share buybacks, which we did some more of in the past year, and now we felt the time was right to signal to investors that we're confident that the group will continue to generate cash in the years ahead. So the time was right to reduce the dividend cover. David, give us an indication of Musica. Your performance slowing in the second half, turnover for the year sitting at 5.9% lower. It has been, many say, your Achilles heel. Are you concerned about prospects for Musica, or do you think that you've actually positioned yourself quite strongly with regards to giving different offerings to consumers in the country? Look, the
we have to say that the entertainment retail space is going to be a challenging one. The long-term prospects for CDs and DVDs is one of decline, and we recognise that. So we've set about steadily reshaping the business, closing marginal stores, focusing on the major shopping locations, and of course, yes, growing the newer areas such as gaming, such as technology, such as accessories. We've got a fantastic range, for example, of headphones now, which have become a fashion accessory in terms of accessing and listening to music.
David, any chance that you might think of selling Musica down the line? Could that be a possibility?
We've always been honest and open with the people in the business and indeed in terms of talking to shareholders to say that the Clicks Group is a health and beauty focused group. So we manage Musica in order to maximise the return to shareholders. If there was an offer that improved the return to shareholders, then yes, we would take it. But what I would say in the meantime is that we've still got a market-leading, profitable and cash-generating business in Musica.
Fantastic, David. We have to leave it there. Great to have you on the programme. Thank you so much for your time. David Kneale, the CEO of Clicks.